Let's go for it. You set?
Yeah.
Welcome to Taking Stock. It is Thursday, the 17th of August, 2023. John's back. Martin stepped in for a day. And in fact, someone called him Mark on one of the comments there, said, I agree with Mark. Who's Mark? It must be me saying Mart. By the way, by all means, get involved, subscribe if you could below, and comment. Because, we do try and cover all the comments. In fact, I missed one from yesterday. I don't know if you know much about RBW, Rainbow Rare Earth. Someone's asked us to look at that. We look at the chart. I'm not fully over it, though, to be honest. But, of course, there's hot sector, Rainbow Rare Earth. But the question I'm asking today, John, which is, I don't know if you've seen the AIM All share. In fact, let me put the chart up here. It's looking a bit suspect. I say suspect, probably not the right word, but... if you look at this is a chart, the AIM All share. Now, we are literally, 6 points away from the lows in July. And if we scroll back, it's come from 1,320 pretty much. That's the COVID dash for cash crash, of course. And if we scroll out back to 2016, in fact, July 2016, now 7 years since we hit that level. So that's where we've gone. We go up there, up, down. It's quite volatile, isn't it? The AIM All share. And now we're back at lows.
It's an interesting index. I mean, it's not really a trackable index in the sense that, people might track the FTSE 100 using an ETF or something like that, because of the nature of the companies that are on it. It's a growth index. So, you're going to see sort of big rises and falls. You would expect that volatility.
Yeah.
But it doesn't paint a pretty picture.
No. I mean, there's a lot. Someone did ask me once, and is it worth, having a tracker of AIM also? I said, no, because there's extremes on AIM. Some very good businesses, and there's some very poor ones who've been trundling along, raising cash for years, getting nowhere, and there exist as lifestyle businesses, a lot of them. So you wouldn't want those in that portfolio of yours. You want to get rid of the rubbish ones and stick to the good ones. And I mean, there are some fund managers that just center on small micro caps, aren't there, out there? They're pretty worth going for if you're looking for a fund rather than an AIM All share. I don't think it is an AIM All share tracker, is there?
I don't think there is. No, because of the nature of the index. Of course, and AIM will lose its best companies often to the main market. So yeah, it's a sort of it's an interesting thing to look at, but it isn't entirely helpful.
Yeah. So what I'm asking here is essentially will it hit new lows? Will we go beyond that and lower than 2016? Because at the moment we are seeing it's almost comes in. I've noticed a sort of pattern at the moment. Whenever you get CPI coming out, and then of course after that the Bank of England looking at all the data. And there's a worry now. There's talk that interest rates could be at 6%. That's terminal rate, peak rate. You get this worrying sell-off, then it dissipates, a month or after. And of course, the Bank of England are probably going to 0.25% anyway. So you do get this worry after CPI, it's rolling over. But the bonds, you can see the bonds that they are rising. I think the 2-year was the UK 2-year. Look at that. It's getting towards that. Previous high here, 5.5 is trying to get it back up there. So we have this risk off mentality at the moment. The markets are feeling very bearish, but sometimes I see this as an opportunity, in this market. If you've done deep research on a company, and in fact, tell us, comment right there. Have you done deep research on a company that's selling off on negative sentiment, but you think shouldn't be tainted with that sentiment? You think in a year's time, 2 years' time, it'll motor like crazy. Let us know. This is your chance. Free promotion for your company that we should research. But there we are.
There are definitely a lot of companies that decent companies that have been sort of chucked out with the bad ones. So yeah, I would agree that it is a good time to get go hunting.
Yeah,
for those hidden gems.
Just covering up a couple of comments I didn't manage to do yesterday that came in. By the way, it's quite a quiet one yesterday, John, because I think the Lions are playing, of course. The
Lionesses.
Yeah, Lionesses, sorry. Is it non-gender specific these days?
I don't know.
So So essentially, I underestimated the popularity of that. I suppose because they win 3-1, he got even more popular. But Reece did say, and I was talking about this, the Bank of Ireland, I think it was yesterday, was giving out free money. People who didn't have money in their accounts could withdraw money, and it wasn't being taken from their accounts. Right. And I said, that's a dream. And I remember going back in 2008, I think 2009, I had very little money in my ISA account, and I saw, this is Barclays, saw 440 odd grand put in there on my balance, right? And I was looking at this every minute to go, oh, it's going to go out. But it was there all day. I checked every minute. Oh, still there, still there, still there. And I thought, I can't withdraw it, of course, but I would have invested with it. If I'd made money, I said, that's my profit there. You can't take my profit. Okay, you can have the 440 grand back. But come the next day, obviously they ordered something and it went back to my original balance.
Taken it all out and disappeared to South America.
Yeah. Anyway, Reece said last week, with HNL, I logged in and my account was in negative balance because it executed 3 of my fill orders 3 times by mistake. So it did it by mistake. It's very worrying when computers can do this. It's if it's human error, fair enough, because a lot of humans are idiots. But computers, how can that do it? And also, Mac, I think 4N59 says 100% agree with Mark. I think that's smart. About the Bank of England being behind the curve, too slow, and he said property was going up by 10 grand a month, and we weren't even talking about raising rates. They would, and we do feel that the Bank of England has been a bit slow and now they're a bit behind the curve again. And I think the lag factors we are now 12 to 18 months it takes to kick in the effects of this high interest rates, and yet the Bank of England continued to want to raise rates. Okay, the core inflation didn't come down, didn't go up though, but PPI is contracted now, which is the input prices, contracted, not just gone down a bit, contracted for the last 2 months. That was last month with 3.3, before that was 2.9. So that's a good sign that contractions are happening.
It's a good sign. It's a good sign on the inflationary front.
Yeah,
but it's not a good sign on the economic front.
China's in trouble, isn't it?
I mean, China is in trouble. Their economy is well, it's not shrinking, but it's certainly growing far less fast than it was before. I kind of the other thing that I think we need to look at in respect to the global flows, economic flows. Germany's in recession, one of the weakest economies in Europe at the moment.
And the biggest economy in Europe,
and the biggest. They sell, a lot of stuff to China, capital goods. China, isn't therefore buying those capital goods, which it would use to make stuff to sell to the West. The things we buy in various shops, and therefore you've got to expect, a really quite significant economic slowdown must be coming this way as well. These are the sort of canaries, very large canaries in the coal mine: Germany, China, us, and it's all very worrying on that front.
I like what China did, though. I think we should do this over here. What they did is their unemployment figures for youth has become so bad now, they've stopped reporting them. And I think it's like, just don't report them and it goes away. The problem is like, what? Talk about lack of transparency. And I think maybe the bank, maybe you should do that with inflation over here. Just, it's too bad. We'll stop reporting it. And I think that to a certain extent, that under COVID, didn't it? Everyone had access to those, the government stats on COVID, and people are tracking it on a daily basis and worrying that it was going up. And they just don't report it. It's fine. It goes away. And a lot of that is because if you scaremonger people, it get worse. People start tight, especially with recessions. People get worried, tighten their belts, make it even worse. When in actual fact they're just worrying too much. Anxiety plays into it. It's self-fueling. A lot of it. You start, everyone's going to go. Everyone's going to lose their mortgages. I think that's the problem. A lot of it is self-fueling. Anyway.
Yeah, but this is the point. I mean, this is the point of interest rate, right? It is to cool the economy. It is to, to stop people, spending frivolously, for want of a better word, to kind of rein in things like consumer spending, house prices. So I mean, there is a reason for doing it. I mean, arguably the mistakes. You say the central bank's behind a curve. Arguably the mistakes were made a long time ago. Mm-hmm. Monetary policy was far too loose for far too long. And that's what's having to be undone now.
I want to correct myself on bond sales. What I mean by saying was the only central bank quantitative tightening, I mean selling the bonds they have, not new bonds, are the Bank of England, and they're selling at all-time low. I can't think where I listened to it at. It's a Bloomberg interview. This guy said basically they're losing they could hold on to these or not sell them back in, but they were losing, he said, around about 150 billion on each sale. So they quantitative, but I think the Fed just lets them elapse or something, whereas Bank of England is selling them back in the market, which is not going to help. Anyway, let's go to the front page of Vox here. Let's look at some of the movers and shakers. Let's look at the indices first and foremost. FTSE 200 down 0.12. AIM all shares down 0.5%, pretty much. FTSE 250, they're very similar actually. I mean, similar as in businesses, but the movements they make, the 250 and the AIM, they're both very similar. In fact, my fund, which is basically FTSE and 250, is not looking good at the moment. It's a bit of a hammering, but it pays a nice dividend, so I don't mind. So it averages down for me on a quarterly basis. But the industry is not looking good. Front page of Vox, let's go there. So we've got Eqteq awarded contract for IDEX's waste-to-fuel facility in France. You want into that, John? You've read about that?
Yeah, it's I kind of like the look of this company. I mean, the share price is horrendous. You probably want to get the chart up for me. Looking at that over the long term.
Wow,
really quite a fall there from the peak. It's a company that does essentially waste to gas. So it's got this technology that basically turns.
I do that as well.
household rubbish into syngas. And I mean, this wasn't entirely unexpected. This contract, because it sold. They call it market. I can't remember what they call it now. I can't remember what they call them. But they sort of test sites for their gasification products in a commercial environment, and it recently sold this one in France to IDEX, and IDEX is rolling out these waste to gas projects. And as part of that sale, the deal was that IDEX would Eqteq would continue to supply its technology, and that's what this is. It's an upfront engineering project, and then you've got sort of follow-on contracts behind that. And the idea is that that Eqteq become essentially an IP group selling their know-how rather than operating these things. I think it's an interesting looking company.
Well, look at that. I mean, the reason why it's one of the most read as well. There's always a bit of hype in there. I remember a lot of people doing quite well from this because from 2019 to 2020, it did 4,000% rise. Yeah. And so whenever you get a company like that, they're always well for the rising share prices attract buyers, attract sort of followers. So maybe they've hopefully not many people got in on the hype there.
Hype cycle, classic hype cycle. We're in the trough of disillusionment, but you look at the numbers and the forecasts. The company's going to do 12 and a bit million quid turnover this year, making a small loss, but then swings to profit in 2024. So it doesn't seem. It seems like a very, very strong reaction to this share price decline to a company that's actually forecast to grow quite rapidly and reach profitability in over the next couple of years.
Yeah, I tend to largely avoid companies that got a lot of hype around them, but maybe you should look at that then if forecasting profitability. But they're down since that peak 95%. So it's a bit of a hard one there. So that's Eqteq. By the way, I would advise you. I've done 2 interviews today. Stuart Gall of Intelligent Ultrasound. This is a local business. Well, so based in sort of Cardiff, Capilly, and they're a place in the US as well. But they're based in Cardiff and sort of Capilly area. And I do think it's worth looking at this. I think the market's missing this because they have AI, right? They do ultrasounds, and GE is one of their partners with the biggest manufacturer of ultrasound machines in the world. They are using their AI. And I said to Stuart, there are lots of companies now who are boasting about or marketing the fact that they have a strategy for AI, just rolling it out and all this stuff. This company, right, it's literally 35 million market cap. They are selling their AI products, and the growth, even from a small base, though, it's very good. So they got it's from classroom to clinic. So they train people on ultrasound simulators, and then it goes into the doctors actually use them in real life situations. But the AI revenue done about 6.1 million for this year, about 12.5 million for the year. They're forecast to be profitable on the current cash now. But the AI, listen to this: so H1 last year 300 grand, H1 this year 700,000. The second half of this year they're going to double that again. So look at 2 million just in the second half. They're going to so they're doing about over 2 million on the AI. Now listen to this though. By 2025, they're estimating revenue of 25 million, evenly split between simulation and AI. So that's going from 300,000 last year to pretty much 12.5 million in 2 years. That's phenomenal if they do that. And if we're talking about people making money, there's not many people making actual money, generating revenue from AI. It's all a bit of hype and a bit of marketing. They're actually doing it. So it's worth looking at that. The fact they're also with GE as well. So and the charts it's a bit rough there at the moment, but they've gone up and come back down. It was tipped by Midas, Joanne Hart from the Midas column, and that's why you see this sort of strong rally here. And it's quite illiquid, but they did come off today. Like I say, their brokers are saying it's 35 million. They see them, if they achieve those 25 million pound targets, they see this company as a global player in this space, and they say way above 100 million market cap it should be, and at 35. But I like the fact they are generating revenue from it. They are profitable now in the cash they have, and so it's a local company. I love that.
It's a really nice company. I mean, the simulation business, the trading business. I mean, it's all sorts of things. It's for they've got things peripheral nerve blocks, and it's for injecting and training people how to inject. Really, really interesting. The problem with that division is a bit lumpy. So the contracts are a bit lumpy, and I think the top line, didn't grow quite as quickly, but on a reported basis because there were some very large contracts last year. Yeah. And as it heads towards selling more of the AI stuff, then the revenue profile will start to look a lot smoother. But
also they suffered a little bit from, like I said, we just come out of COVID and things have been a bit uneven, and so now they are building back up in the so half the revenue is pretty much from the UK, and the other half is from rest of the world in the US. But rest of the world, the US, that increased on the simulation biz by 154% in the US, 101% in the rest of the world. That's growing very nicely. And I said UK will pick back up, and then you've got the AI side as well growing very quickly. So I think it's a tech company with working revenue generating AI is growing very quickly. So it's worth a look at.
Selling to the NHS is always tough. But as you say, they're really doing well in the rest of the world. They started a direct sales team over in the US. That's helping, and that's really driving the growth there. And as I think I mentioned the other day, I can't remember if I actually mentioned it on here, but the UK government is starting to fund some AI projects within the NHS.
Okay, comment there. What do you think? New lows for AIM or not? Or do you think it'll bounce so we get a higher low? Let me know. Also, another interview did with Eqteq Lithium. Now, of course, there's been some issues with media speculation over Ghana potentially upping their royalty. So, whatever country you're in, basically they charge a royalty because the country doesn't own those assets. It's owned by the country. Even with oil and gas, you pay a license and you're allowed to develop those. And so in certain areas, there's a royalty of like on certain commodities, like 5-10%, but they think maybe 10-15% on lithium. But like I said, Neil from Atlantic said there's not a problem. The margins are very good, and if you look at some of the figures on the DFS, they're very impressive. Like 316 million of EBITDA per annum over the life of the mine, and all very high margins, and so it won't be a problem. But they've just announced that Piedmont Lithium, which is their partner, have agreed to go ahead and take the option here to fund, part of this. I think it was 70 million so far for 22.5% of the project, and they will fund further as well. So that to me is a conference ticking the box because he's out there at the moment. He's in Ghana at the moment with Piedmont, and they are chatting to the government ministers. So even though the share price came off recently, I think it's all happening. So the next big sort of thing you'll see probably is the mining license grant.
That's what everyone wants to see. There's confidence tones coming out of there. So maybe some of the speculation is a bit alarmist.
And it's worth noting that the directors have been buying shares all the way down here. They're increasingly putting skin in the game, and their commitment's very high. But so we're back at sort of 2021 levels here.
We're getting that funding. Getting that funding is secured. Signed, sealed, and delivered is crucial.
And I think Neil said on the podcast they need about 57 mines to come online next few years globally, lithium mines, and literally it takes about 10 years pretty much to get a mine online.
Big looming deficits in the lithium market, but that's the same. That's true across a lot of metals that are going to be very, very important for the energy transition. Copper is going to be in deficit very soon.
And that's how long it takes, because they got into production by Q2 2025, and he said we've been at this since 2016. So you can see how long it takes, and you know, so we're going to see this massive deficit here. What else on the front page? Oh, Windward.
Windward,
like
yeah. I do another AI-enabled company.
Yeah,
I really like this one. I like the whole area of maritime domain awareness. It's, you know, if you think about, you know, air traffic control and how important it is keeping track of everything in the air, it's the same as increasingly true of what's on the oceans. And, you know, they are very big places and very difficult to track what's going on. So, you know, the AI element of what Windward is doing is absolutely crucial. And, you know, it's basically, they sell to basically governments who are, you know, trying to monitor you know, seaborne traffic, but also increasingly commercial customers who want to be compliant with various regulations, not least sanctions. So you know, it's all designed to basically, in that sense, speed up the, you know, make seaborne trade a lot more efficient. And you know, they've announced some really interesting tie-ups recently. London Stock Exchange for their sort of dashboard for sort of those using their products to track goods at sea, but also, you know, commercial customers themselves who are trying to be compliant. So yeah, really nice. And, you know, you can see some operational gearing in effect here. You know, the gross margins going up, cash burns coming down as the number of contract customers increases. You know, new products being rolled out that just increase the attractiveness of this this platform to both governments and commercial customers. Yeah, I think it's a really good company.
Yeah, and if you look at sort of cash flow here, cash used in operations there, $4
million,
5.8, yeah, for 5.8 in dollars, yeah, and they've got about 18 million, so they've got way over 12 months, you know, to get the profitability there.
Yeah, I think it's 2025. So they said that exit 24 EBITDA positive on a sort of monthly run rate, but 25 is when they're going to report profits.
Yeah.
So yeah, it's a good one.
Yeah, and look at Stephen was just commented. I said, you know, let us know of a company that you know, you want us to talk about. Pre-promotion, we'll do some research. Stephen said, a mine is a hole in the ground with a liar on top.
Mark Twain. Quote Mark Twain there.
Yeah. Well, the thing is, you can say that. In fact, you can say that about lots of mines, because the chances, I don't know what the stats were, but an exploration company, the percentage chance for getting into production are literally low single digits. You know, because you have all the problems of, you know, getting the funding and all that stuff. But I can safely say, so for example, I think Atlantic Lithium are one of those ones that will get to mining, because they're only literally now, you know, 2025, early 2025. The funding's in. They got a big partner, and of course, they're in the right space with lithium. So I do think they'll get there. But
yeah, I think Mark Twain might have said that during the you know, sort of the wild years in America, you know, sort of gold rush, all that sort of stuff. You know, things are a bit different now. You know, there's a lot more transparency in mine development. That's not to say it's easy, or that you know, the mines that are being developed will ever produce anything. But yeah, it's not quite as bad as Mark Twain would have observed back in the 19th century.
Yeah, but there is a play, of course. A lot of explorers, they won't say this. They'll pretend they're going to get mined out. But what they want to do is to prove up the resources, you know, and reserves to a certain stage where they get taken out. Essentially, they don't have to go through the complex processes of actually building a mine, raising the funds, and all that stuff. Going through, you know, environmental permitting and all that stuff. So they want someone else to do that, because it's a long slog for a small company.
It is a long slog.
Yeah, and it's costly and expensive. So
it's getting more difficult as well. And you mentioned environmental permitting there. That is making, you know, particularly in sort of Western jurisdictions, making mine development, you know, ever more difficult. And of course, investors want to see that the companies that they're invested in are doing things ethically. So again, you know, that all just adds to the cost. But this also then creates the situation where we face deficits in certain metals, because bringing mines on stream is very, very, very difficult. So then for the miners that get it right, the rewards are potentially huge.
Yeah. Okay, most followed companies, Belluscura is up there from yesterday, of course. They announced a pre-order on their new generation portable oxygen concentrators of 6,500 units, 15 million, which is about 2,300 per concentrator, I suppose. But that's a good sign. But their growth is looking. I did look at their broker notes. Yes, and the growth is perceived or expected growth if they hit the units looking very good actually. So what's that? I've never heard one of the winners today, Carta, and I thought it's one of these companies when you click into it, right? So they're 9.29 million.
That's not right. I don't think that's correct.
Okay. That's KCT. Okay, maybe it's not. Carta. What we got there for the market cap? 112 million.
Yeah, I can make it 113 million. Got a bit of data issue there. We'll have to sort that one out.
Yeah, okay. So, but the trading update here, I was going to say that doesn't make stack up, but they just say net revenue for is 48 million in line with expectations, and they say adjusted for full year, adjusted operating profit expected to be between 17 and 18 million. So I suppose that's a PE of what 9, 10, I suppose, but they do have. What I looked at there, I always look at this net debt of 20.
Not much though, not much. No, for business, cash, is it? But for a business, well, you don't always have to have net cash as long as the debt can be serviced. And this company is delivering, quite significant levels of profit. So you shouldn't always scoff at companies that don't have net cash.
I wasn't scoffing. Net debt.
That doesn't mean they're not worth looking at, as long as the debt can be serviced.
Exactly. But the thing is, as long as it can be serviced, like I said, when you get the cost of debt going up, and that's why it's a worrying scenario for lots of companies, because when the cost of debt is going up, and global economies are slowing down, or your market's slowing down, then it's a double pain. It's a pain from both sides, isn't it?
Yeah, I mean, this company, it's quite interesting. It does digital transformation, it goes into companies and helps them manage their data, and put efficient processes in to help companies maximize the benefit they get from data. Data is the new oil, has been said before. They got a bit unlucky because they were reducing that quite rapidly, and then of course COVID hit, so that made life difficult for a lot of companies that couldn't get in and do the work they needed to do. But it's on the way down again. As you say, it looks very, very attractively priced. So 2023 PE ratio, forecast PE ratio of 10.
Yeah, 10. Yeah,
and it's growing at a lick.
Yeah, it's good. Bank of Georgia as well. So it was done quite well, the Bank of Georgia, isn't it? BGEO. Look at the. I think it has anyway. Look at that. That is lovely. When you see a chart of that straight away, just bouncing off that 200-day moving average, and today up again, breaking out of a new range there, and that's always nice to see where you get that with a. If previous high there, and it's broken up above that today. But if you scroll back and look where it's come from.
Well, we know there were obviously concerns about one of its neighbours at some point in history, Russia. But those were overblown. Georgia has managed to kind of not be invaded. so there is
I think a lot of people are putting money into Georgia because of the concerns of Russia, and so the banks they got oddly a lot of new Russian customers in the Bank of Georgia.
What a surprise!
Of a sudden,
yeah.
So that's up 367% in the last.
Big company. That's knocking on the door of the FTSE 100.
Yeah. So that's impressive there. Anything else? What's the big losers today? So,
Tremor.
Tremor. What are they about? What do they do? 264
ad serving basically.
Advertising technology. Now again, that is very telling when you're advertising. So they got a Q2 and H1 results out. So adjusted EBITDA significantly rebounded 137%. Yes, but what level is it from?
Well, it didn't hit the level that they wanted it to rebound to. It's just the main problem today.
Is that the issue? Is it? Okay.
Yeah. So they're missing their numbers. A lot of the commentary around this. I mean, the brokers. The brokers appear to have been caught very much by surprise at the extent of the downgrades at this company. It's a worrying sign when even the sort of brokers can't keep up with, or they're caught off guard by the extent of these downgrades, and that's hence the big fall today. They made a big acquisition last year, this Amobi, which is a sort of integrated ad platform, and I think there's some worries about that. They say it's fully integrated, but acquisitions can disguise a lot of ills, and they don't always work quite as intended.
Yeah, see, that's a bit of a trap as well on the chart there, bull trap, because essentially, broke up nicely, gapped up above a 50-day moving average. Think, okay, it needs to get above previous highs, which is pretty much here, and it did that. And then we got this trading update coming. There's something going on here. Look, last few days before the trading update, it's really come off, and then it's gone down there. So, if you got in though above on that gap where it gapped up through that 50-day, you'd still be pretty much, even after that, you pretty much, where's the gap there? You still be okay on the thing. That,
we might see a bit more weakness here.
Yeah.
When the market gets rattled by a big downgrade, then the selling pressure, it could persist. It sort of follows a theme though. We've spoken about this. We've seen it in companies like S4, WPP. Even the big boys,
Future
Google.
PLC as well. I mean, if the big boys are suffering, advertising based, then it's worth a read across. Okay, other
very tricky market,
smaller sector. Yeah. Okay. Marvelous stuff. That's it for today. We're spot on time. Look at that. 12:30. Thanks everyone. Oh, hang on. We got Lion Trust. Okay. Listen, we'll try and get those. I sold Tremor at £6. Thank God, Stephen says. Ethical mining, perfect example. CleanTech Lithium, using DLE to extract lithium in Chile, powered by 24/7 sustainable electricity, no fauna or flora disruption at 4,300 meters altitude, no indigenous people there. Rupees in half their board are women, ridiculously undervalued at the moment. Okay.
Precisely. That is exactly what people want to see in a mine.
CTL, actually, I just got an alert on those on the chart. I think it was yesterday, which I didn't actually chase up on it, but let's sort of share screen. I think it was on the 200-day moving average. Yeah. So it's not a trend. It's gotten down there. It needs to break it above that again, maybe a previous high. But but no, it's interesting. I was the only worry again, similar to Ghana, really. They came out recently, didn't they? The Greens policy in Chile, but Chile, as Americans say. But it's not going to affect them because Chile concerned about the massive national significant projects, which they're going to sort of getting control of. But the smaller projects, which will still move the needle massively for CleanTech, but it's not worrisome at a national level. Marvelous stuff. Thank you for that. Don't forget, hit that subscribe button. And is it the end of it's Thursday, so we've got one more. Okay. All right. Well, speak tomorrow, John.
See you later.
Okay.